Morning, 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 guys. Another minute or so. A few new names there. Okay, we're still at 9:30, but still have mutual. This is a bit of background there. If you want to interact verbally, that's brilliant. I encourage it, in fact, but I've had to mute you all because of the background noise. So just remind me if you do interact, just say, Roger, please unmute, and I'll do that. Also have a chat line for interaction. As I say, every day, well, not every day, but most days, it is a forum. It's not a class like you go to your Zoom DFD class or whatever. It's a forum where we interact. And I'm going to be up front to get a lot of great ideas from this interaction for myself. So yeah, if you see something I could have missed it, I might see something that you've missed, etc. So we interact. We're not a training room per se, but we can clear up some misunderstandings, clarification of stuff you learned you're not quite sure of. So if you're not sure of something, interact, and we'll do our best to assist. If I can't, somebody else on the forum might actually understand and assist you. We all try to, you know, hand it back. We're all trying to keep the same goalposts. Okay, right. Just get the people in here. past. Okay, we can start. As we all know, we will tabulate it. It's CPI coming in, release the figures of 2:30. There's only a limitation of about 100 people. Just a lot of stuff coming through. Put me up a little bit. There we are. Okay. So it's important you understand the mechanics of the trade, and you've got time to place it. You want to place it in the last 5 minutes before the release of data, not too early. So it's no use coming in and asking what the mechanics are with the 5 minutes to go, as happened last time. And then guys put half the order in, it doesn't work out. So I'm actually going to work up. It's advertised at 2 o'clock. Is that right? 2 to 3, yeah. 2 o'clock. I'm going to actually open up at 1:45. So it's going to be on that basis, first come, first served situation. Remember, because of the limitation of seats, if you want to grab yours, basically come in early, but it's not up to you, won't stop you. It's not for people who've got very little money and can't make use of the trade idea or on demo accounts. Because let's say somebody's got the money, wants to join, can't get in, because someone's taking up the seat and can't do the trade, financially haven't got the balance, or they're on a demo. Demos, mentioned many times, to teach you how to operate the platform. It's not there to learn how to trade. You will not learn how to trade on the platform. It doesn't work. You know, the only way to do it is because they're money on it. That's one of the reasons why we got the micro, is so people can go live without the big fear of too much at risk. Again, on Wednesday, 1 o'clock, I'll do a little session for about an hour on the micro and how beneficial it can be for those to have it, and go into the reason why it's different to the other NASDAQ or the other Dow Jones, etc. Clearly, if you know that, there's no point in joining me on Wednesday at 1 o'clock, because, well, you can if you like, but, you know, why do that? But those who don't understand, I'll go into detail then. Okay, right. Just let these guys in here. Okay, as we know, it's Consumer Price Index, CPI, in the United States. When we talk about CPIs, you have them in Germany, you have them in South Africa, you have them all over the place. But the major ones are the United States, and that's the ones we want to trade. I call it a strategy trade. I'm assuming that's the right lingo. I don't know. I'm calling that anyway. And this is, we can spend a bit of time this morning, because I don't really have any great trade ideas. I've looked through, as I normally do in the morning. If you come up with them, we'll look at them immediately. Remember, it's a trading room. If somebody comes up, like Jacob or Zander or anyone comes up and says, can we look at the Euro JPY or whatever, that gives precedence. All I ask is, when you place the request on there, you mentioned looking at buy or sell. Don't just look at the Euro JPY. I don't know what you're perceiving from it. It's important that we discuss it. I look at it and think, I like that for a particular reason, a buy or long or whatever. I might turn around and say, why do you think that's a buy or a sell? That's the way you learn. It's not. I'm not here to catch anybody out. You know, I'm not. The idea is for people to learn, to get an idea why we're doing certain trades and why we're leaving alone. LIA, by the way, is a sort of a trading room, meaning leave it alone. LIA. So we talk about LIA in here. Sometimes it's all in fun and banter. We go clap, clap. I'm going to chicken out of it, that sort of thing. Try to make it a bit of fun, a bit of banter. But the bottom line clearly is to learn. And we're trying to get away from blindly following, because you need to know why, where, what. So in the end, you're in control of yourself. Okay, right. Okay, now I think, can we check silver? Yes, okay, we said it. You're right. Now, what Jacob's just put up there means he's been attending the trading room and hopefully he's learning. Before I get too ahead of myself, I'm assuming Jacob has only started his learning process from doing maybe a couple of lessons in the CFD and in the trading room. So I'm going to ask you, Jacob, that's quite an interesting comment you made there, because it's, well, quite frankly, it's pretty good. Did you learn that stuff in here, or you've been trading a couple of years and you learned it elsewhere? Honest there, because I want to encourage the guys to see how they can benefit from the trading room. But if you've been doing it for 2-3 years, that's different, because that's not a bad question for someone who's just starting. It's quite a good one, in fact. Have you just started your trading journey with us, or you've been trading for a while now and you learned it here? There you are. See, you can gain benefit. And I don't think you're doing it that long. So that's another positive. You don't have to think I'm going to spend 5 years studying before I can even start earning a living, like you do as a lawyer or a dentist or doctor or whatever. That's not a long time, sort of getting an idea. Okay, brilliant. Right, silver, before we go to silver, I just want to mention silver and gold are not the same, but similar. So you very rarely you'll find that gold shoots up and silver comes off. They usually go up. Let's say silver and gold go up. They might go out in different methods. You might get gold go up there, silver there, or vice versa. But you won't very well, it might happen, but I haven't seen it yet. There's nothing, anything can happen in this world, you know what I mean? Strange things do occur. I haven't seen it where gold will go up and silver will go down. So they are similar. It's probably unfair to say it's the poor man's brother of gold. It's just more people trade gold than silver, but it's still highly traded. If you like silver, stick with it. Okay, all right. Now, the interesting part, what he made there was for the DXY. Now, before I go into it, I just want to just copy and paste it for you, because a few people don't have that. I'm just going to copy and paste it on the system. Please, if you haven't got it, save it, because this is important. Now, what Jacob meant by that is a couple of things. Correct me if I'm wrong, Jacob. I might be reading your mind incorrectly, but I'm assuming what you're meaning is this. The dollar's been a bit weak lately. DXY is the dollar index. Been a little bit weak lately, and it's starting to recover. It's down at 103.5, and it's now at 103.9. Now, if the dollar strengthens, in theory, emotion can play different parts. But in the theory, he's quite right. If the dollar strengthens, gold and silver are likely to come down. Right. The other aspect I'm assuming he's looking at, it's had a hell of a run the last couple of days. It's gone up, literally, this is a day candle. In 2 days, it's gone up by, what's that? Nearly $2. That's a lot. It's about 10% if you look at it percentage-wise. So thinking it is come up to a bit of resistance here. Already, the guys are getting a little bit nervous of buying in here. It's likely to have a pullback, and the thinking on top of it to confirm it is the dollar rising. So from what Jacob is saying as a potential sell idea, I like where you're coming from. And actually, funny enough, I agree. So, right, that's all very well. Let's put the risk reward up. Why am I hesitant? Now, the reason I'm hesitant, guys, I'm pretty sure Jacob knows that, but you guys might not, is the fact, as I mentioned just now, the consumer price index is a measure of inflation, and it's coming out later on. This could, if it's coming wildly different to the expected figure, this could have a positive or a negative effect on silver and gold. So even though it is very overbought, it's probably getting to the stage where it's getting exhaustion, etc. I think you'll find, if you look at the 15 minutes, that's only 15-minute candle, remember? We all count at 15 minutes in duration, pretty sideways. I'm thinking, Jacob, that the world is waiting to see what the inflation figures are like, and that will have a big effect on gold and silver and the dollar, and on the indices and on the share prices. Okay, so for that reason alone, I think I would stay on the sidelines. If that wasn't coming out this afternoon, I would be looking, yes, a pretty good idea. I would look to sell this one and I would look to sell gold. Does that make sense? So for that reason, it sometimes, but sometimes a bit slower than, but it's similar, but it's not the same. Yeah. But from that point of view, okay, 9 months, so that's fair enough. So from that point of view, I probably think it's probably better to leave it alone. If it wasn't the CPI, I would say, thank you very much, pretty damn good idea. On that subject as well, don't forget, you go to silver, you haven't traded before, for example, you left click on it, all right? I know the older guys will know this, so I'm just saying for you guys, left click, then you right click and you go to specifications. This will give you the contract size as well as the deposit or margin. The contract size on here is 500. I think you all now know what that means. I mean, 500 times 21 in US dollars, that's a lot about 10,000, just maybe $11,000 and some change is the contract value. It's 1.0 exposure. Those things you've got to understand. As you went to, let's say, oil, which WTI is, Western Texas Intermediates, American oil, juice there, that'll give you the contract size of 100. You must always check that. Some companies, sorry, some brokers will have the contract size 1,000. So clearly, if it's 1,000, 0.01 on here is on the 1,000 contract is the same as 0.1 on here. So if you say I work out my risk reward at 0.01 being, let's say, 100 Rand, and the contract size 1,000, then the risk would not be 100 Rand, be 1,000 Rand per micro, if you see what I'm saying. So you must know the maths of that. Okay, so I'm personally in favor of waiting for the release, but otherwise I like the trade idea, I like the thinking, and in fact I agree with it. That's the only reason. Okay, I'll give an example, guys. I think the euro dollar is a buy or a sell, and in 10 minutes time the non-farm payrolls are coming up. Probably not a good idea. If you did without knowing it and you got it right, well, lucky you, but once you didn't, it came the opposite way. Don't forget the power of emotion, very, very powerful indeed. Rational figures might come out, it might have sometimes the opposite effect. because of some emotional reason why they're pushing in a certain direction. So try not to get too cute on what is going to happen after the release. That's why we do what's called a straddle trade with a buy stop, sell stop pending orders. So if it does go one way, we're taking in. If it goes the other way, we're taking in, going short or long. Okay, but we'll do more of that just now. For newer guys, please, if you don't have the money or on the demo, I'll explain it to you just now how it works, and you can do it yourself if you like. But you know, if we had an unlimited amount of trading room, a Zoom meeting, that's fine. But we don't want to take up the space of somebody who can make use of it for those who are just there because it seems like a good idea at the time. I think we're on the same page there. I just want to, for that reason, if you disagree, you like silver the short, and you want to do it now, I will put up the risk reward. I'm just saying, you might come right, you might not, but I just want to make you aware of what's going on so you make hopefully an informed decision. Okay, I've also put up the economic calendar, very important indeed. If an economic fundamental in the US, particularly, not just there, pound, euro, etc., we talk particularly the US comes in, I don't care if it's a double top, a head and shoulders, a double bottom, or reverse head and shoulders, or resort, it doesn't matter. That will shoot out in that direction, the fundamental move. If you see big moves, it's usually because of the release of a fundamental. Okay, so the candle will tell you what the buyers and sellers are doing. Big moves will be fundamental. Smaller moves can be trading for whatever reason. And then you get the indecision areas, which are very small candles. And you see the body there, the wicks above and below, that's just indecision. In other words, you want to go out tonight, you want to take your wife out tonight, it's your wedding anniversary. You want to take her somewhere nice, but you're not sure where. Indecision. Okay, some sort of principle. Okay. I think so, Jacob. That's my opinion. Remember, always, guys, it's my opinion, and we all learn. Farn's just joining. He's often put stuff in, Anna Marie. Some of the guys who are in here quite a lot point out something I've missed. Thank you very much. It's an opinion. I don't know what's going to happen. We take a view. There's millions of people trading. Always remember that. With different views, different emotions, different monies, different strategies, everything. So just bear that in mind. Okay. Right. We're not going to, if you want to put a chart, put it up straight away. But some concerns coming to me is people trade without fully understanding the different orders. Somebody wondering why. Morning, Sunday, see name. Okay, Sunday. Good morning. Don't understand the different orders. Somebody just came on today, don't join me just now, wondering why I didn't make any profit or loss at an order when they went in. Didn't realize that in the market, which was a pending order, it wasn't filled. In other words, I offer you a price to buy the product you're selling at a lower price, for argument's sake. If you don't accept it, I'm not in the market. We don't conclude the deal. It's just saying, I like what you're selling me, but I don't want to pay your price. I'm going to pay, well, in my opinion, a better price. If you accept it, I'm filled. In other words, the deal is done. Don't accept it, I will pull that order, pull away. So I'm just going to do a quick one here. I'm not platform trading experience. Just want to clarify something here. If you go in to market execution, you're in the market, and a pending order, let's say it's a buy limit, buy stop, really, whatever. You've got something here called the expirations GTC. If you go for a placed order and it says GTC, then it's good till cancelled, that order will sit in the market till either that order is filled or you cancel that order. Okay, we'll look at a moment there. Okay. Right, the Brent trade put out again from yesterday. A lot of guys in the trading room took profit in it, and I thought there was a chance we could maybe have another bash at it. Some guys out there didn't join the trading room, might be sitting in it still. I hope they have enough common sense not to see, because I've got another order on that today, double up on it. That's where you got to think a little bit of common sense. But I know for a fact a lot of guys are trading modified the stop loss and would have been stopped out in a profit. So I suggested maybe send it out again, because it's come back down again to reasonably low levels as a potential buy. Now, the signal came in, I think it was 78.60, round about that mark. Okay, and now you can go in now if you like, but remember it is about 60, 70 cents above the deal. So you can either put a pending order in, which is a buy limit in this case, or you can think I'll go in at market. So let's just have a look and see what it's doing on the shorter term. It's a bit sideways. So that's telling you people out there are a bit indecisive on it. Will it be affected by CPI? Well, yes, maybe not as much as gold or the index or the euro dollar, but it will be affected. Okay, so the point is then that I still think it can be done, but bearing in mind that, like everything else, there's a bit of risk involved. So if you like it and you want to go in the market, you can. If you like it, you want to get a better price, you might want to buy limits, or if you're keeping an eye on it, well, just wait for a better price. Hopefully, most of that's sort of common sense. So if you're in it already, clearly off them double up, you're 100% overexposed. It just, a guy thought, some guys took profit, not just trading guys, a lot of guys out there took the profit, and they're thinking maybe never have another bash at it. That's the idea behind it. Okay, but it's a bit slow, but don't chase it now. Let's have a look where it is now. We put it down the daily, and we put a stop loss down here somewhere, about $3 away, maybe make it 76, something like that. You can still aim up here, and you can still get your risk reward around about these levels here. So that's entirely up to you if you want to go for it again. This meeting is a trading room. If a beginner comes in and wants to learn, well, what a pleasure, they can do that. Not for guys who just thought, I like this thing called stock market. I don't know what a forex is. I don't know what a share is. In other words, I don't know how to put this polite. I don't know anything. Not even what a platform, what MT5, absolutely nada. Then you've got to go and get a little bit of basic knowledge. What I'm trying to say is you don't have to get a whole load of intricate details and theory, just enough basics so we can put that theory into practice. So yeah, so Joy, if you like, you can hang on in there, you can interact. But if I start talking about lot sizes and a pip, and 0.01 is a micro, and 0.1 is a mini, and it's 10 times a micro or whatever, and that's completely meaningless to you, then it might be an idea to, number one, platform trading. You cannot place a signal, place an order, do anything without that, and understand the difference in the pending order, understand the platform, and then do maybe a CFD and a Forex class to get the basics. And then you can join us in here. If you don't that and you want to sit and learn bits and stuff, you can, but if it goes a bit above you, ask a couple, but I can't spend an hour doing free trading. That's the job of Stock Market College or wherever you bought it from. We're separate companies. Stock Market College deals with the training. I deal with the practical aspects after the basic training's been done. Hope that all makes sense, Joy. And our guys who trade like Pete, etc., and Farney, who don't want me to spend another hour explaining what a lot size is when they want to get on to see about selling or buying a specific trade. They want to put their knowledge into practice. Okay. But once you got the theory, I think it's vital to come here. That's why maybe fishing a bit with Jacob to say that unless you get putting together fundamental as well as the practical side of it, it's not enough just the theory. As always, though, try and remember most of this, like most things, a large amount of it is common sense. So it's not as difficult as it looks. What the difficult part is the emotional side can be often unfathomable, but a lot of it, because it looks difficult, you think it is. And suddenly think, oh, it's not that difficult after all. Okay. Okay, but as I say, to anybody there, feel free to stay. If it gets a bit what the hell's you're talking about, do a few basics. But interact, whatever, like you've done there. Thank you, Jordan. Okay, right. The other aspect is, if you haven't got a course and you can't afford a course, don't try and trade freebie in here. Try to trade when you know nothing and you don't want to pay good money to get the knowledge. The little money you got will be lost. It's almost guaranteed. If you don't know how to drive, you get in the car, you might get lucky, but in the end, you're going to crash the car. You've got to have some driving knowledge. Okay, simple as that. Okay, so Brent, if you want to go to market, I'm getting too much of a problem with that. As long as you get your risk reward there, Pete, I'm sorry. But yeah, I think it's still okay. But make sure you got your risk reward okay. And your volumes, of course, which I don't have to tell you that, you know that obviously by now. Okay, right. Got it. Thanks, Pete. Okay. Yeah. I just want to go back to this penny order just quickly because it's causing seem to be quite a few people. It won't take long. I'm going to go penny, guys. I'm going to give you a whole full-on platform train. That's the guys at 6:30. The pending order. If you go to a pending order, you're not in the market, and on the pending order, not in the market order, you get this GTC good till cancel. All that basically means if you put an offer in above or below the market, then you're going long or short, that'll sit there until you delete or cancel it. Is there any cost? No, it isn't. You're not in the market. If you have your expiration is today, which a person called me up today, it was automatically removed at the end of the day. So if you put a buy limit on Brent at the moment, so Euro CHF at the moment, that's what it is on there, it doesn't really matter. The close of play today at midnight, whenever it is, if that order is not filled and you're not in the market, it'll automatically be removed. So that's the difference. So you weren't in the market, no cost, and that's the end of that. Because people think, well, I didn't make a profit, did exactly that, like the signal said, and didn't make any money because you weren't in the market. Okay, just want to clarify that to anybody who's here. Happens quite a lot, and hopefully it doesn't take too long by demonstrating solve that issue going forward. Good till cancel, the market will sit there till you cancel it or it's filled. Daily means it'll sit there till the end of the day if it's not filled. Market execution, you're in. If you're in for market, how long? Well, forever, unless you close it manually where it just stops. So that's the answer to that. Okay. Good. Okay. Right. The Dow Jones hit the TP yesterday. Good stuff. It finally went in again. I don't know if you're still in. I think it actually might have stopped you out. It shot up yesterday for whatever reason, but then it's come off again. So I think just leave it alone. Some guys took the NASDAQ trade. We didn't send it out. I still think we should have done anyway. The office didn't. But we did in the trading room. It's doing quite well. We got the CPI coming in, hit the stop loss. We pity about that. Yeah, anyway, so be it. Maybe we jumped the gun, whatever. But the NASDAQ one, you're in a profit at the moment. You let it run a bit. But what I'm going to suggest is put unless you stopped out in this one, you might have been stopped out when we modified the stop, I don't know. But if you're still in, I would be careful of the CPI coming out later on. So anybody still in a profit, rather modify it to stop your stop loss to entry. So if something goes wrong with CPI, you aren't going to take a loss. If something goes right, you make a handsome profit. That's basically all about risk management, and that would take. I'm assuming the jump up yesterday might have hit a lot of guys' stop loss on the modification basis. But some guys might still be in it with the original stop loss. Just be careful of the CPI. We don't want a profit turn into a loss. Okay. But yeah, I thought that earlier on. I think you might just pity about that, but there it is. Still a lot of fear out there. I think it maybe calmed down the market. We found Silicon Valley Bank was going to get the depositors' money going to be saved. A bit of relief came in, but still there's a lot of fear out there. Look what happened to Schwab, and a few of the other banks came off quite a lot because of it. So there's a lot of fear out there. But it's going to me, it's going to be quite drastic what's going to happen going in the future. So we'll just have to wait and see. Okay. Now the euro dollar as a sell, absolutely. We discussed this more in the strategy room. Absolutely, I see this as a sell. We all agree it's a sell. So why aren't we going to sell it? CPI, simple as that. Okay. If you want to, you can, but that to me, without the CPI, is a sell. Even the dollar's going up a bit, as Jacob correctly says. It's technically speaking, it's hit resistance, and the resistance or the ceiling has been holding, and now it's coming off. Absolutely. This one is a sell. I presume you're looking at it for a sell. We haven't put that down, Pietro, but I'm telling you right now, if you think of a sell, I totally agree. Am I going to do it? I'm worried about that CPI stuff in the system. We've tried in the past a couple of ones not so long ago with the GBP, and the fundamentals screwed the trade completely. They're all in profit, nice trades, say myself, but the fundy stuffed it up. You might get lucky, but then you might not. Eurodollar. I can set to sell. Who set to sell yesterday? I didn't put it out. Remember, I'm legally allowed to give signals. The other guys aren't. They can send it after I've given a signal, but if somebody gave a signal on that without that, they shouldn't be doing it. You shouldn't be doing it. Remember, the great guys, the account managers, and they can, if I say sell the Eurodollar, they can copy and paste it onto somebody else if they want, but they can't say, I look at that and do it on their own bat. Okay, we won't send. That's why I didn't send. I didn't send it. Won't send. They're not allowed to send it. I've got to do it basically. Well, not just me, but the KI. We've got other stuff to do. Those are the only ones qualified to give the signals out. So if somebody else did it without my say so, they well, I'm not dropping them in it, but they shouldn't be. So I don't know where you got that signals from. This is another company or something. Oh, I see what you mean. Okay. Well, yeah, if you did on that base, that's your choice. But what the signal sent out, let's look at the GBP AUD. Let's put the risk reward up here. Yeah, let's have a look at that. There. If you don't want to go for it, yeah, they're doing that's fine. That's not a signal sent out. That's Gerard or George or Bill wanting you to do it. Whether you did it or not, it's entirely up to you. Okay, all clear. Just put that stuff out. I'm not trying to drop or get clever. Just say that. And just remember, just because just in the illegal aspect, you know, I'm pretty sure Farney knows pretty good what a trade is, but you know, unless you're registered with the FSCA, you can't put it out and do it to your mate, your husband, your wife, but you get my point. It'll be regulated. You didn't say you're good or not. Because I got the driver and I'm a good driver. But it's just I can't go on the road without the license. Okay. Good, as long as you got the picture, not knocking anyone, just don't understand. Okay, all right. So Euro USD, yeah, like it to sell. Absolutely like it to sell. Even going back to whoever put that idea out. Dude, I'm just worried at the moment because the CPI could stuff the system up. Are we all on the same page? Okay, good stuff. Right. Anything else to discuss? Oh, yes. Okay, my number. Just give me a moment. Okay, there's my WhatsApp number. Gets quite busy, so if it takes more information required, I will leave a voicemail. If it still takes more, I will call you, but you WhatsApp me. Right now, what are the certain qualifications for that? Number one, the person must have 500 Rand or more in their account. If they've got less than that, I can add value to what's happening, and it's time consuming for me looking after guys as well. Okay. And number two, if you've got more than 2,500 Rand or the equivalent in US dollars, and you maintain that balance above that, you'll be uploaded to what I call a VIP group. What is that VIP group? It's a very fancy name, but what it in practice means, it means you will get more signals. Okay. Now, example, you've got 1,000 Rand in your account. There's nothing wrong with that. It's fine. That's what you got. But it's completely pointless. Go shopping. Let's say you got 10 grand in your pocket. Go shopping around for 500,000 Rand houses or $1 billion Rand houses. Simply, it's pointless because you won't be able to, even if you like the place, partake. So getting 3-4 signals when you have limited amount of money, you've got to start picking and choosing which one. You haven't got enough money to place them all. So you'll get the odd one on the MT5 mailbox. The idea being, if you've got more money, you will get more signals because you have enough basic balance to place them. How it works, you've got to maintain that balance above that line there. If you balance, you start up there and you do badly, and it comes down below that line, you automatically won't be sending signals. On my group, which is a WhatsApp group, you'll still get the daily morning updates, even drop below. I'm not going to start filtering that. You'll still get it, but you won't get the signals because yesterday you did. You had exactly 2.5. Now you're on 2.4. That would be filtered out. So if you can have, let's say, 3 or 3.5 and maintain the 2.5 gram balance, you'll get those extra signals. Simple as that. So that's what the number's there for. And then if you need me for that reason, you can just WhatsApp me. But I plead with you to keep doing it. I got your name from George. Who are you? And I say, oh, my name is John. Well, John, there's millions of you, John. Please use some common sense. I need to know your full names. Preferably, it makes life a lot quicker if you put your real account number in. If you have that in, I can just quickly check in the system. I know now it's Joe Bloggs or John Smith or Mary Jones or whatever, and then I can take it from there. So you have contact details. But if you do want to contact, don't say hi. Get that a lot of hi. Well, hi. This is John Soap, George Bill, whatever it is, John Soap, real account number 13456. So I've got more than 3 grand in my account. Can you update me to my VIP? I'd like to have some opinion on the Euro CHF as a buy or sell. Don't let me draw it out of you. Give me the data and it speeds everything up a lot quicker. Hope that's all. Okay. Right, GBP USD. I agree with you. Eurodollar GBP USD. Not even look at it. Sell. I agree with you. Totally agree with you. To sell. Oh, hang on. Jumped the gun a bit there. Tibble-Murphy's law. It's in the buy zone there. I prefer to break through there. But we need to maintain in the buy zone. I don't think so. I do see downside there. Agree. Not technically a brilliant one, but again, it's going to be affected by the CPI at 2:30 this afternoon. But yeah, I see downside. Technically speaking, it looks like it could bounce up here. I'm just a bit nervous about pound strength, and I think the dollar weakness, unless the inflation data coming out later on today stuff the system up, I see there could be some dollar strength coming in. Okay, so to be honest, Schmel, is that right? I would be a little bit cautious buying or selling dollar-related products for the moment. Okay. But if that wasn't the case, I would be looking at Eurodollar sell. I'll look at this as sell, and I'd be looking at probably a buy on this one. I'd be looking at a buy on that one, but I'm just going to be a little bit careful. Ishmael, okay, thanks, Ishmael. Just careful your caps, just so you know. Okay, yeah, so there it is. Okay, got that. You got the you've got the economic calendar, talking about specification. Oh yes, one I'm trying to remember each time to say. Save your charts. How do you do it? Right click, go to templates, save the template. Put your name in there and then save it. So if you lose your charts, I always show it, it won't take long, guys. You've seen before 100 times. Go to new charts. This sometimes happens. Now what do you do? Well, you saved it. So you right click, go to templates, and the one you like, you save many of them if you like, click on it, and your charts are back. So don't forget to save your charts. If you want any information about the instrument, no matter what it is, left click, right click, go to specification. It'll give you the contract size, as in shares, it's 1, and it'll give the deposit, maintenance margin, whatever you want to call it, it's 5%. If you want to know what the leverage is, 5 to 100 is 20, so shares are leveraged 20 to 1. You all must know your leveraged instruments with the associated risk reward involved, and how to work out the leverage. Simply divide the deposit or margin to 100, give the leverage. In other words, it says you go to specification, says 0.0, is that right? 0.01. Yeah, that's right. 0.01. That's clearly 1%. 1% deposit, divide 1 into 100, clearly it's 100 to 1 leverage. I hope everyone understands that and what it means, because a lot of guys are trading, don't understand the basic and maths of it. You know, leverage trading is, you've got to know you're speedy doing it. Hi, Nico. Yeah. Well, Nico, they were till one of my trading ideas, and that stuffed that up. No, I'm just joking. The trading ideas haven't been too bad lately. No problem. I hope I get you for the CPI later on. Is that right, Dirk? Will you be joining me for the CPI straddle trade at 2 before? Okay. Right. I think it's going to be a fairly quiet session today, so we can do a bit of interaction, some questions you're not sure about. If I don't, and the other guys might know if I don't understand the question, and I might be misunderstanding it, someone will help me out. But any interaction or explanation, if you want to go to the mechanics of the straddle trade coming out, we'll be doing it twice a month for CPI and the non-farms. So it might well get the hang of it. Yes, it does. Nico, do me a favor. You got my WhatsApp number there. Just send me a WhatsApp. If you're already on my system, just tell me. What I'm asking is WhatsApp me the number I gave you. Say it's Nico Smith 165341 real account number, and I'll add you. Okay, good stuff. Right. Got a quiet minute. Anyone want me to go through the mechanics of the CPI trade later on? Because if it goes, well, you can see it can be quite profitable. The guys have already done it the last 2 or 3 times. Okay. Right. Gold or euro dollar? I'm trying to dissuade people of going to the NASDAQ because of the spread. Oh, there's a classic one. I did that on purpose, by the way. Look what happened there. It can easily happen. So it's going to go around there. I didn't do that on purpose, just by coincidence. That's amazing. What have I done now? Concentrate. Templates. There we are. Okay, I did. It's amazing. That just about 2 seconds later. Wow, wow. If you want to do anything else, that's your choice. I'm gonna go on the euro dollar, but the gold, if you want to do the gold, it's $3 above and below. Okay, right. Euro dollar we got up now. You don't put the order in now. This is purely an example. You put it in within 5 minutes of opening, because you're going to put a buy stop in, a sell stop. You don't want either of those particular trade orders filled before they release the data at 2:30 this afternoon. Okay, you put it in now, it could get filled, and that's not going to help you at all. Now, normally speaking, I've said 10 pips above and 10 pips below. I chatted with Fani yesterday, and in my own head, I probably better to go 15. Why do I say that? If it's a radical difference to the expectation, you can get a gap opening, and that means you might not get filled. I see us selling it technically. I'm saying, Ishmael, we've got a fundamental coming out at 2:30. CPI, Consumer Price Index in the US. Done it before on the last one. We did the NFP on Friday, and most people got the trade right, the trade straddle trade right, and made money. Ask anybody here who did it, they're pretty happy chappy. Okay, we're going to trade this fundamental. So yeah, the reason I'm going 15 is because the last thing you want to do is it opens up, let's say, pips higher and moves up, you're not on board, or vice versa, because your order wasn't filled, gapped up. Does that make sense on opening? So I've decided probably, it's up to you, then you can, but I think it might be better to go 15 pips above or below the market. So what we're going to do then, pretend you're going to place the trade now because it's 2:25 or 26 minutes past 2 this afternoon. So what you do then is you go to euro dollar and you go to pending order, and then you've got to work out your volume. On the euro dollar, I'm suggesting 80 Rand per micro would be your risk. So 0.01, you put in $80. Now, it's quite open there, Nico, with $170. So I'm going to put that into Rand, which is about, what, 3,000 Rand? So we'll call it 3,000 Rand, okay? 3,000 Rand, you shouldn't really be risking more than maybe about 300 or 250 Rand, what you're comfortable with. So it's 80 Rand a micro. I'm suggesting you go within 3 or 4 micros your volume. Please don't ask me just before the release of data what volume you put in. Operating the platform, what you're prepared to risk is your responsibility. I can give you a guideline, ultimately it's up to you. And then you say to me suddenly, hello, this is George, what should I risk? I've now got to stop the whole thing, find how much you've got, and it takes too long. You've got to know what you're prepared to risk. So you've got to know what volume you're putting in. That's your responsibility. If you want to risk a bit more because you can afford it, you can. I'm just saying, rule of thumb, roundabout, ballpark, by 80 Rand a micro is your risk. You want to risk? All right, I got volume here for 4 or 5 there. So I said, I'm prepared to risk 400 Rand. And don't say, I put in, nothing happened. I couldn't take the order filled. Well, you might not have enough balance. If you got 450 Rand balance and you try and put 5 in there, you won't have enough money to get in. You've got to understand this kind of common sense. You go shopping and it's 10 Rand, you got 9 Rand in. You're not going to get filled. You're not going to get the product. So you've got to use a bit of nous, really. It's frustrating, to be honest, because it should be utter complete common sense. People seem to be battling on that. So you've got to work out your volume. So what you're going to do now is you go to a buy stop. You worked out your volume, you put it in, and then you put in the price. 10 pips above the buy, not above this one, the buy. The sell stop will be 10 pips, or sorry, 50 in this case, below that one. So what's 15 above that? That's going to be 1.0708, yeah. 1.10, got this right now, 708. Is that correct? That's too many. We'll get this right. I'm battling now. 1.15 above that be 1. Oh, no wonder it's wrong. Give me a second, you guys. Sorry. That's why, make sure you got it set up before the market opens. 0.7. Ignore the point. We're not after points, we're after pips. 10 points, 1 pip. That's 7. So what's 5 on that? It's going to be what? 12, isn't it? 1, 2. There. That's okay. You got me on that one. So that means that's 15 pips above the market. You buy stop. Click on place the order. Is placed. So I'm going to put in a placed order there. You can see it clearly. 15 above the market. There's 12 about there. Okay. Next, you go to the euro dollar again, obviously, and this time you're going to have the volume. In my case, 5 could be 10 to match. Example, you work out your volume. This time you put a sell stop. Then you're going to put the price in that you want to go in. No stop loss, no TP. Right? 15 below that is 82. So it's going to be 1.0682. Then you click on place the order. Let's do that. Now we placed it and you got 10682. Where's it down here? That's right. So therefore, you've got a buy order above the market. Buy order above the market. Let's get the verbiage right. Okay. You've got a buy order above the market and a sell order below the market. Okay. Right. This can't be put in the left now because it might go up and fill you. You want to wait to the data. The last thing you would want to be filled with a buy or sell order before the release of the data. Right. Now it's coming up to half past. Right. The figures are released. We don't know what's going to happen. No idea. Don't even think, what do you reckon? Meaningless. I can ask Nico what he thinks. I can ask, I don't know, Pietro what he thinks. It's about as much value as what I think. It doesn't mean anything. You do not know what's going to happen till the market releases the order. And even then you get some jumping around. So you've got to be on it. Right. Now the figures come out. In this case, for whatever reason, it jumps up. First thing you do is you delete the opposite order. Hope you all understand that. Not this one, or obviously not this one, but you'd be surprised. It's tiring sometimes. The unfilled order, the non-one that wasn't filled, this opposite order, you delete. Once you deleted it, then you can follow it up. If you've got time to put a stop loss in, you can do, maybe just above the market price that you entered in, so you take all risk out of it and follow it up. If it's jumping around a bit, you're getting nervous, you can go to a volume, double click and have the close handy there. Don't put your mouse there in case you close it by mistake. So if you want to close, just go there and close the order. if you want, or you can ride the stop loss up. You can even drag it up from the thingamajig. I can drag this up or down. See what I mean? Drag it up or whatever you want to do. You don't have to go and open up and modify. You can drag the stop loss up. You can drag the stop loss up. You get the idea. So either way you want to do it on that basis, just be careful you don't knock yourself out the market. It can be very fast, it can be slow, it can be all sorts of things, but it moves fast, you've got to be on it. Okay, so that's how you do it. Okay, so you enter a buy stop, a sell stop, 15 pips above the buy, 15 pips below the sell, no stop loss or TP, only after release comes out, it comes flying off, you clearly delete this order here, and then you either put a stop loss in, or you exit, or you do what you like. But bottom line is, if it does come off, don't sit there in the off chance and it goes back up and you make a loss of it. Don't, it's up to you. If your first time, be nerves, sometimes take it too quick. Just, you know, play it by ear. Even if you do take it a bit quick and you made 10 Rand instead of 50 Rand, at least you made a profit, at least you learned from it, because there'll be other occasions, the CPI we're doing next month, and the non-farms we're doing in April as well. Once a month, they both come out. So it'll be 2 a month and be another opportunity. Well, that's the general idea. Yeah, I go up or down. We don't know which way it's going to go. Not the Ramper micro on that. We'll start for $3 above or below on gold. Don't want to confuse guys now. If we go to gold, let's say, ignore the steps, be 1912 or 1905 you buy stop. The volumes are quite simple. Remember, the contract size on gold is 10, which is quite small. You all know what that means now, don't we? It means 10 times that. So it's $90,000 is the contract size, American, for 1.0. So if it's going to be a mini 0.1, that's 1900 and only $190 the exposure. So the exposure is just over 3,000 Rand, whatever the exchange rate is. So you get my point. So it's quite small. So I would assume on the gold, let's have a look here, what we can do. Depends on your account. I know she comes and work from the micro. Next one in. I think we'll work on the base of a $5, not a $3, a $5 stop. Make my maths life a bit easier to show you. One position size calculator, or have it. You must have it. Get it if you don't have it. Live chat, produce it. We're going to put a stop loss in 1905. Just get an idea. 19. Matter. Okay, that says about is this? Oh, yeah. I think about 10 Rand a micro should do it. Not much because the movement's involved. So I think you can work on the figures. It's about 10 Rand a micro. Okay. In fact, probably pushing it a bit. Make it 20 Rand a micro, just to be on the safe side. 20 Rand a micro on the gold, Anna Marie. Yeah, if they believe that, they might well be true. You don't know. Well, might be, but whatever happens, as long as it's different, it's the same, you might get some whiplash. As long as it's different, and it's a big difference, whether it's bad or good, it's irrelevant. It's a big difference. What we're looking for is a big movement. If it goes right up, we've got the buy to take care of that. If it goes right down, got the sell to take care of that. If nothing much happens, well, get rid of the other one if it jumps up a bit and then see what happens. You've got to play it by ear. We don't know. You don't know the market reaction. Economists might be right, but you might get a different reaction from the traders to the expected reaction, because emotion plays a big part. So we don't know. There's no such thing as a no-brainer, but so far, touch wood, they haven't been going too badly. I think, Anne-Marie, you've been for all the ones we've done so far, and you can see that has worked out fairly well. Hey, Okay, are we clear on the mechanics of it now? Vicky, you clear on it now? When this word, Brian, Johnny? Yeah. Got it. I think you missed out on Tomby last time. And don't say about 30 seconds to go, can I place my order now? You've got to sit within 2 or 3 minutes, 4 minutes, it takes you a bit longer to get the order in, both of them. Otherwise, you won't have time to place it. And make sure, whatever happens, neither side, the buy or the stock gets, either the buy or the sell stock gets filled before the release of the data. Very important. And there's no guarantees. You might, any of that, you might get a jump around it and anything like that. But I found the error probability, experience doing it so far, is far more good than bad. And, okay, let's hope it works out. And a lot of guys in the trading room now did it on Friday, and I think there's a few smiles on their faces. That was an on-farm payroll. You all know what that is. That's a monthly jobs report. Not always, but usually the first Friday of the month. Okay, so we're all clear on that. I'll be going through it again, obviously, just before 2 and 2 o'clock for newer guys coming in. And I'm trying to encourage guys to, haven't been to trade before, I'm going to try and sell the trading room simply because it hurts me. Not my money, it hurts me to see guys making mistakes that needn't be made. I don't know what's going to happen to the price, but nobody does. But I do know about volumes and things like that and modifying stop losses, and that can be learned in here. Making mistakes simply because having attending stuff and those things can be rectified. And the biggest thing as well is don't try and expect a small amount to make a big amount. If you've got a limited amount of balance, and that's all you got, don't expect to run at the same speed as the guy who's got a bigger balance. It might be common sense, but people think they can make some horrendous returns by giving a very little balance. No. Okay, so I think to play safe, 10 might be erring a little bit on the caution side. 20 bucks a micro on the gold and 80 bucks a micro on the euro dollar. It's your volumes, and you can work out what you want to go in on. Okay. On the basic maths thing, if you've got 0.04, you know when you get the signal that says risk for, let's say, 0.01 is 100, 0.02, 300, 400, and you got 20,000 rand in your account. I don't want to come to me and say, why are you going 0.04? Because that was the biggest amount put on the signal. Then I want to go and shoot myself. Surely you can extrapolate from there. If you've got 20 grand, let's say you want to risk 800 rand, you can see it's 100 rand a micro. What's 8 times 100? Well, 8 says 8 micros, 0.08. So again, the volumes can be deduced from the risk put out there. I don't think we should do 0.02. I think a person should have the ability to want to go by they know the risk per micro and divide it into the amount you want to risk to get the volume size. I'm on the occasion if that's can't be done. I'm wondering if this is going to be the game for the person. If they can't work that out, they're going to be tackling with doing anything really. So yeah, those basics got to be understood. Okay. Okay. Right, guys, any questions on what we've been talking about, any of it? Are we all okay with volumes? Absolutely essential. You all know the position size calculates everything except shares. Do not. If you want to go to Tesla or Google, this thing is useless to you. This is only for anything but those. And to say, does that include the indices? Is that a share? No, so it must do that. Anything but the shares. Okay, that's when you use this to get the doesn't matter your leverage irrelevant. That will give you your correct position size, what you're prepared to risk, and then you know before you push the button what you're risking. If you want to do the share one, it's an Excel spreadsheet. You can get it off your LMS. What's that? Have you got the stock market college product? Well, you know that. you still don't know, ask your account manager. Simple as that. You all should have the portal. On the portal, the account manager's details. The trading is recorded and put on the YouTube there on social media. Platform trading, this thing here is on the trading experience. It's all there. Go through the tools you've got. Okay, and then you'll find that hopefully it'll bear fruit. Hopefully. Yeah. Okay. Best time frame to use, Marie, is depending on the individual. I personally use the day for my strategy. Then I look at the other time charts to see if any other information. Some guys use the 4 hour. Not me use the week, but some use the 4 hour. Occasionally you get guys in an hour and 15 minutes. I'm a little bit wary of that because of the costs involved. On the euro dollar, maybe not a problem. But if you do something like the NAS, an hour chart doing your strategy on, is it going to be enough to scalp it to basically give you enough profit, overcome the cost? The spread is 12 pips compared to, let's say, 1.5 pips in the euro dollar. So if you're starting off, I suggest you stick to this, and then when you've got more knowledge, you can play around and adjust accordingly. Okay, I use it daily. All right. What I have on here is the 200 and the 50. These two are the most important, and they're used internationally. I strongly suggest you have them both. This is the 100-day, and I think it's important. This is the 10-day. I personally think it's important, but it's not as essential as the other two. If you like all four, put them on. But whether you put them on or you put in a 75 or a 15, that's entirely up to you. But I do like the 100 and the 10. But these two are 200-day simple, 50-day simple, are used internationally, so they become self-fulfilling, and they're used as filters for support and resistance, as well as whether it's in a buy zone, medium zone, neutral zone, or down near the sell zone. Okay. Now they apply to all charts. So we think we're going to now buy gold, right? It's the buy zone. Happy with that, Marie? So now we're going to look at the weekly. Weekly is also in the buy zone, and this is now the 10, not the 10-day, the 10-week moving average. That's the 200-week moving average. You get the idea. So that's also in the buy zone. Let's look at the 4 hour. Right. Sorry, what? Maybe I'll write it down a piece of paper, remind me of buy one. That's the way. Sorry, that's the only one I've got. Mind me. No. Sorry, hang on. That's the only one I've got. So if that doesn't work, mind me afterwards to go and buy one for next time. Oh, there's a brush out there. Yeah. Where was I? Yeah. Oh yeah, that's right. This is a 4 hour. Now that is a 200 times 4 hour, but they work on all charts. Remember that. Okay, a buy zone. So I'm looking at this one here, also in the buy zone, and the 10 times 1 hour is holding. So technically speaking, 15 minutes is not above the more, but this is slightly below that. But when you've got the 1, 2, 3, 4 looking at a buy, this one looking at a sell, we've got more probabilities to buy than sell. So now your question, Marie, will be, wow, that's great now. Is it holding resistance here? Yeah. Is it getting going? Look at the candle there. Bit of indecision. If it's so clear in the buy zone, why are we buying? Why is indecision? Because it's gone up so quickly in the last 3 days, best part of $100, people are getting a bit wary. It's gone up so quick. Number one. Number two, you check your DXY, which I posted for you there. This goes the opposite way to the dollar. If the dollar starts to strengthen, this should come back again. Right. And on top of that, we know that 2:30 is big fundamental news coming out. So I am now nervous to sell or buy it because of the reason, the big fundamental news coming out. And that's why you can see on the 1 hour, it's going a little bit on the sideways side. Does that all make sense? That's the practice. Don't overcomplicate. We'll stick in let's say a MACD, stick in a relative strength. If you like them, great. But remember, those indicators lag the price action. They give you information after the price action has been established. We're looking not for what happened before, we're looking at the likelihood of what's going to do next. The likelihood, technically speaking here, is sideways to upwards. Why don't we buy it? Because we've got major economic fundamental coming out that might give a pullback or up. We don't know that. That's why we're sitting on the fence on it. Bit of practice. You're going to get in the car with me now, Marie, and then you change gear here, let the clutch in, you stall it a couple of times. Practice, it'll be like you're changing gear without even knowing it. I look at this thing every day, and I can go in and let's do this one here. Doesn't matter. And I can form an opinion. I see a medium on the house, I go to the daily, and I can form an opinion by looking at how we've looked at it. I can give an opinion. That's just practice. Okay. And that's how it comes, I say, with practice. We practice every day a better golf, and if you go and try to hit the ball once a month, simple as that. Quick question, Tracy. No, that's I don't use them. Mind you, I'm front of feel like I don't need to. I feel like it, great. Sometimes it's useful in the middle of the night when you fall asleep, have a curtain stop. Otherwise, it takes 2 seconds, even out and about or in a meeting, you can do it below the meeting table, or I've got to go to the loo, take it with your phone and just quickly modify it manually. The problem with trading stock is there are different volatilities for different instruments at different times. So you don't know whether to put a 2% or 3% or 1% or 5 or 10%. It depends. And even when you've got some experience, you can have a situation which is the most volatile one. Let's try the NASDAQ. Very volatile, this one here. You can get a candle like this one on the daily candle. Look at that movement there. 440 pips in a day. This one, that day, only had 100 pips. So if you put a wide stop, you might miss out. Sorry, if you put a large percentage trading stop, you might miss out. If you put it very close, because the figures you got there, then you could be moved out the ups and downs, the motions ups and downs before it shoots up again. I'm not in favor of them, except in the middle of the night. Okay, so you might want to put a trading stop in the middle of the night, but then you've got to work out what percentage. Then you just have a look maybe on the movement of the candles to choose one. It's not as simple as that. Okay. Got it. Okay. Gold's a safe haven. Gold, over the aeons, has retained its value, and the half-life of gold, I think, runs into millions of years. In other words, it lasts physically, and the value lasts. It's the fiat currency goes up and down, normally down in value. All of them suffer inflation to some stage. So the currency devalues, gold holds its own. And that's why it's sought after for hedging purposes, for the safe haven, for the fear factor. The crap's hitting the fan, as we all know, that's been hiding under the ground in South Africa. So it's wise to have some gold. So if the dollar suddenly goes, not the dollar, rand suddenly goes to 25, 30 to the dollar, everything's falling apart, junk bonds, you name it, that gold will maintain its value. So you can live in the country and have some form of stable wealth. The beauty is it's like cash. You take that gold to Timbuktu, you take it to Borneo, you take it to wherever you want to go. You hand in your gold, you're not allowed to have bullion, it's got to do Krugerrands. You hand in your Krugerrands, and you'll get that dollar per ounce or whatever it is in return across the table at that moment. Not trying to sell your house or a car or a painting or whatever, but to find a buy, blah, blah, blah. Walk to any bank, say, here's my Krugerrand, give me the cash in the local currency, and there you go. And that's why it is bought up by a lot of people as part of their portfolio. What the downside of gold is, it pays no dividend and no interest. So we call that the opportunity cost. That's why if interest rates go up, it's negative on gold, because an alternative gold is putting your money with a higher interest rate. Okay, so the lower the interest rate is, the better for gold. The higher interest rate, the worse for gold. And it goes the opposite direction to a US dollar strength. The dollar goes up, gold go down. Where do you get a case where the gold goes up and the dollar goes up? Fear factor out there. Another invasion of the wall, threat of nuclear retaliation. A bank's just gone under, a major bank, not with all respect to Joe Slocum Company, but a major bank's gone under. Then you put shudders and fears to the international money market, and people rush to gold. So that's where it comes in. Hope that's all clear. Basically, is to look at yourself and say, right, do I have fear and greed? The answer clearly, yes. What would you do? I've heard your money's with Nedbank. I've heard Nedbank's got some problems. you've got your life savings in N Bank. You get in the car and you might decide, let's find out and draw the money out. In other words, panic sets in. And that's what affects the world markets as well, emotional panic. That's the way we are. You would do that. Everyone would. Eh? Oh, well, don't worry about it. It should be okay. That's fine. That's not good enough. You're 60 years of age. You can tool get another job. And that's your life savings. Play safe and sorry and get it out. You can put it back in again if you like when you find the room is over. But that's how you get runs on the bank. And that's what happened to Silicon Valley Bank, SVB, a couple of days ago. They needed $2 billion because assets are required for a debt they had to pay. Got out, fear panic rode in, and $42 billion of withdrawal because obviously people get worried, understandably so. These are fear factors which play a big part of the running of the market. That's why I say learning on a demo account is pointless. You take the fear factor out. That's why you're not learning on it. That's why we brought in the micro on this one. That's why we have it. So it means you can buy and sell the NASDAQ. It's popular, it moves, and you don't have to go in and risk too much because you just go on the micro. What's the difference? Just quickly show you. I'll be going through more on Wednesday. Just do it quickly. Go to specification. Contract size 1. Do the normal one. Contract size 10. So that 0.01 on that is equivalent to 0.1 on that. In other words, if you're getting 1 on there, it's equivalent to 10 on that one. And I'm sure we can do a trade on this one here, right? Just show you some quickly. I've got a few minutes. No one's asking anything else. So just do it quickly to clear this up. I'll go into more detail again on Wednesday for that. Right, we're going to do a trade on this one. Going to go long, I'll go long. I'm going to put the stop down here, and we're going to put the TP where I put the TP. 12.5. You look at your risk reward 1.95. Okay, that's no problem. It must be over 1.5, in my opinion. If you want to do less, up to you. That's fine. So that's great. What is it? It's 47 Rand per 0.01. That makes it possible for everyone to trade the NASDAQ. 0.01. Now we're going to do the same trade here. On this one here. Sorry. This one here. Forgot where we put it. Somewhere down here, somewhere. What's something like that? We'll put the 12.5 in here. Just the right, not the mic. Sorry, I'm mistake. Okay. Now this is the normal NASDAQ. See, 0.01, same volume. Look at the difference in risk. 438. You went 0.01 on that. It's 440 Rand a micro is your risk. On the micro, it's 44 Rand, a tenth of that per micro. So that's the differential between the two. And remember I mentioned that, I think she's still here. The lady went in with 2 micros on the Dow on the normal one. Yes, you are. I won't mention name, but it begins with M. I know the lady knows what I'm talking about. Went on the Dow with 2 micros the normal. Luckily, the trade was right. She made a killing, an absolute killing on it. But the correct one would have been on the micro. The volumes were right about correct. Maybe should have been 0.05 or something on the micro. You get my point. I'll have a look at Brent in a minute. So just remember, lose most of the thread there. If you got less than 5 grand, I'd say less than 8 grand, don't do the normal Dow. Less than 5 grand, don't do the normal NASDAQ. Do the micro. If it goes right, you make a killing. If it goes wrong, you blow your account. Just bear that in mind. Hope you understand the maths of that. Now you got me Wells and the Brent. It's all right. I hold this thing. That's better. Sorry, yeah. Yeah, just you can choose. Yeah. Do that. Yeah. Yeah, sorry, where was I? Yeah, no, 79. Well, the area to get in was 78.60. It shouldn't be killing you unless you didn't take profit and you're up yesterday up to these levels and you take profit. But it's okay. Unless you're overexposed, it shouldn't be killing you. You know what I'm saying? Just make it an hour. In the last hour or so, it's only moved about not even $1. It's not that much. Anyway, it is because you're overexposed. That should be right. Okay, so just remember, guys, be careful of understand the difference between the micro and the normal one. You did very well, young lady, today, phenomenally well. But you're overexposed, and it was a great trade. If it had been a bad one, you would have been hurt. So just remember, get that position sizing correct. Okay. All righty, good stuff. Any questions, guys? Getting there or getting more confused? Good stuff, Fiona. All right, so you've all got the mechanics of the trade coming up later on this afternoon. I'll go through it again quickly, but be ready to place it. Getting there, yeah, getting there, it's fine. It's a process of just time coming into it. And then, yeah, then like I said, it becomes habit. So do you get it wrong? Yes, you will. The sun will rise in the east tomorrow and you're going to get it wrong. That's sometimes your fault. When you get better at it, it's not always your fault. It's just strange things happen emotionally to affect the price action, which is go figure. Sometimes it'll happen. You think, what's going on here? That's why you have a stop loss. That's why you have an economic calendar. So you just check it before you go in. Want to go into the pound and make a decent order, look brilliant, technical, everything. Just quickly check economic calendar. Oh heavens, CPI and the GBP is coming out in 10 minutes time. Better wait for that. I want to go in the euro dollar. Hang on, the euro. Regards the president of the ECB, Economic Central Bank. She's speaking at 12 o'clock. You're about to go in the euro before. You could maybe wait till she's doing the thing. You get the idea. I'm still here, Nico. You left. Nico there. LMN, no. No, it's just left. I'll explain it again. When you're putting, I don't need your login details. It's not doing me. All I need is your account, your real account number. It should be a 6-figure number. Anyone wants to WhatsApp me and give me the details. Say it's Joe Smith 192345. Whatever. Your login details, but not doing me. In fact, it's private. It shouldn't be given to me anyway. It's like giving the lending you the lottery ticket. Okay, getting there. That's what I want to hear. You're getting there. All good. Got some new guys in there. Some had to leave. Got stuff to do. Oh yeah, a little thing here is the location. Is coming here. Just in case you're not aware of it, I've only got it recently. Quite good value. I think you'll see it. It's a router. Most might know. 50 gigs a month. And it's costing me 249, so I call it $250. If you pay cash for the actual router, the actual hardware, I'm not sure how it is. I took it on monthly, it's $30 to rent it. It's a 2-year contract. The point is, you've now got 50 gigs a month, and that's your backup. So if you get load shedding like that, you should be able to afford 250 rand a month. You won't, wherever you go, take it with you. Put in your pocket, you have your phone handy, you have your computer at home, you take your computer with, you've got that handy. So you won't have that problem. You can't get into the trading room. You can't close your order because you've got load shedding. You'll have that as a backup. And 250 rand a month for 50 gigs a month at any time is pretty good. Just make sure you have the app. If you do that, I got mine from Vodacom, probably similar MTN, I don't know. Make sure you download the app and make sure you can keep an eye on the data you're using, because if you go over that limit, it starts getting very pricey. But 50 gigs should be adequate. Clearly, don't use YouTube and Netflix on it, that'll chow it. This is basically a backup, so you can make a living for 250 rand a month because you've got the backup. You can't go into a fantastic trade because you didn't have the backup for load shedding. That should take it out of the way. So there's just a little bit of a tip for you if you bear in mind if you want. Because you do need the tools to do the job. You need a computer and you need decent internet. Hope all clear on that. Happy with that. It's a bit quiet because of CPI, so I'm waffling on a lot of stuff. But some little things might be useless to you, might be a little bit of a tip, might be of use. Because a lot of guys are suffering because they can't do stuff because they've got load shedding. That 250 rand a month take that problem out. Okay. That Brett's holding on. It's not a big panic there. It's all drifting a bit. Look at the Dow drifting a little bit. We're on an hour. Look how it's drifting. And this is a volatile instrument. See, drifting. Right, we've only got a few more minutes. Any other questions? Anything else? I'm thinking more the newer guys. Thanks to the patient, the guys have been around a bit, but we haven't got any trades. That'll come first, as I always say. But a few newer names there. I hope there's been some clarification. And if not, well, at least you've got hopefully some sort of target to aim at, the way forward. And a regular attendance here, the idea is to basically get the practical skills and take some of the frustration out of it. Not all, but some. Why do you think of a question where I just want to mention different names for different platforms? We use gold. Thank you, Lorna. Thank you, Knowledge. We use gold. Some people do XAU USD, same thing. Some might use US 30. We use the Dow. Some might say US 100. We use the NASDAQ. Some might say US 500. We use S&P. S&P, can't trade it now. How do I know that? And apart from that, I'm telling you that's the case, but the way to find out yourself, go to specification. It'll say down there, close only. So if you're in a trade, you can get out of it, but you can't enter a new trade. Why is that? We're getting a lot of data issues from MT5, which is causing us more problems than it's solving. So now you've got the alternative, the NASDAQ or the micro. Why would you want to trade that anyway? It's a better instrument, better for you to trade the NASDAQ micro. This was good in the past. A lot of people couldn't afford the NASDAQ. Now I can't see the point of it really. Now you've got the micro. Okay. Now I just want to bear in mind difference of the companies. Stock market calls are separate to me. I work for Quick Trade, not SMC. Any issues with SMC, you take it up with SMC on the live chat. Anything to do with trading, you come to me. Anything to do with opening up an account, you go to your account manager. Anything that happens on the platform, we use the platform. It's a separate company. MetaTrader 5 is a British original base, but and all over the world, big in Australia as well as over here. And they have a myriad of brokers using it. Glitches occur sometimes on the platform, and clearly in the UK they sort it out. So Quick Trade, it's all Frody. Quick Trade are making a hassle of it. It's not our fault. We use this platform. They'll try and sort out the data completely. How long will it take to fix? How long is a piece of string? How long the technical guys? I don't their business. I'm not a technical guy myself. However long it takes, the quicker they take it, obviously the better. But they'll take however long it needs. Okay. Right, another thing, all these include the JSE and the Dow, all exchanges around the world have insurance against malfunction. They've got backup systems, don't get me wrong. If you've had a malfunction and the data gets stuck there and you're in a long, for argument's sake, and it comes off, the stop loss will still click in, but you'd have to go to investing.com or something to follow the share price, nothing you can do. If it opens up, when the data feed comes back in, up or down, nothing to do about it. Can't say I want my money back or whatever, or hang on, you did okay by it. No, we're short against it, we can do nothing about it. So when it comes down, Sometimes the guy will turn around and say, data's down, they're now informed. They'll get on to whoever's responsible to get on and sort it out. In the meantime, we just have to wait and sit it out. Nothing else you can do. Just bear that in mind. And if you get a loss because of data loss, we're insured. You can't say, I want my money back. No, it won't happen. Okay, sorry, one of those things. Doesn't happen very often, but it does. It's not our fault. It's a data problem. Happens in the JSE, and that causes all sorts of ructions. We don't do JSE shares anymore. It happen. My trading plan a few times, all sorts of ruction, but nothing you can do. It happens. Okay. It's like insurance, say, an act of God. It's not insurable for that reason. Okay, see you at 13:45 or 2 o'clock, and we can make it 2 if you like, you know the score. Just to get the guys in place. Great stuff. It's nearly 12 anyway. I've covered most stuff. Keep a pen and paper when you join me in Future Trade Room. And think anything during the day, just jot it down. We can cover it as best we can and hopefully get you on the road to clarity. So when we do get trades out, yeah, you can be on it basically. Absolutely, Isabel. Brilliant. I like it. Yeah. Thanks very much, guys. A little bit earlier, but I think we've run out. And I'm tired to listen to me, so I'm sure you're pretty tired to listen to me by now as well. Okay. Okay. Catch you later. Cheers, guys, and thanks for joining me. Cheers.